All right, and welcome back. Here we have a daily IRL to ERL market maker model. This is the same one that I have been going over. So if you want to see the exact days that the exact price action every single day, I had that all in the case study playlist. But as always, I'm a developing student. These are just my interpretations on price. Shout out ICT. So let's get straight into it. As we can see, overall, what is order flow? What is order flow? Order flow is currently bullish, and we currently have been in this nice order flow. Institutional order flow is bullish, and right here we come back down and we retrace this imbalance here. Notice here as well, there's no imbalance lower, so it would only make sense for price to only need to rebalance to this imbalance to then head higher back in the towards institutional order flow, and that's exactly what we end up having here. We end up coming back down, rebalancing here, and then in the way we are forming a market maker buy model. So as we see here, we have a daily internal range liquidity to daily external range liquidity. And this is really just going to highlight the market maker model, buy model that we've been having. And right here, we have this daily internal range liquidity. We come back down to an area of fair value. We fill in this imbalance here. Then here, we have that daily change in state delivery right there. That's when everything's going to be a little bit higher probability. And then we come back up to this external range liquidity. As soon as we turn into internal range liquidity, and we have changes to delivery on the lower time frames, then we can now look for external range liquidity. Say you want to wait for daily changes to delivery right here. We end up having that here, and now you can be a little bit more confident that we're going through this external range liquidity there. And here is a 4-hour chart of NASDAQ, and I just want to highlight the fact that we have come back down to an area of fair value, this 4-hour order block. Prices changes to delivery. We have a big wick within this candle, which just shows order pairing, return of fair value. The intention is to go higher as seen within this wick. Then we come up, we trade back down to order block here, order block here, order block here, and just notice how it's nice, beautiful delivery. And I do want to come back to this because I think that this is pretty. I was looking at this and I was like, no way. But we're gonna come back to this same chart. As we see here, we had a nice little market maker buy model. We have a original consolidation. Then we break away from that original consolidation with big displacement showing intention of price heading lower. We don't even need to rebalance this imbalance. So notice that this is left as a breakaway gap. And in one of those days, I highlighted that the fact that we that was a draw on liquidity for one of those days. So I believe that was probably the 16th or the 17th. Yeah, probably the 16th that you could have seen that exact price action. I have it in the case study playlist in case you want to go over it. And here we have distribution, redistribution into the liquidity area, smart money reversal. I don't know why I said into that daily fair value gap. And then we have a smart money reversal. Come back down. We have an area of accumulation, maybe low risk entry framed here. I just like to look at it in terms of accumulation and distribution, and then I only really like to highlight the second stage of distribution. So I never really say like, oh, low risk entry here, because I feel like that's a little bit what am I trying to say? That's a little bit kind of just like it's subjective. I only like to highlight the second stage of distribution because it happens in certain areas. Like as you see here, if you swing grade this model from smart money reversal to the terminus at that 75% level, or in here, sorry, it's just crisscrossed. Here, that 75% area, we expect to see the second stage of distribution right there. Boom, 75% we have or 25% we have a low risk entry. So I guess here would be your low risk entry accumulation. Then we have more accumulation at 50% of this model. We end up having a stop hunt, and it doesn't look like a stop hunt here, but we are rebalancing this, and we are taking some form of stops here. And then we have another area of accumulation, area of accumulation, area of accumulation, and here from external range or from internal range liquidity to external range liquidity, we end up creating a market maker buy model. Very nice, very beautiful, and yeah, as you can see that. And here in a market maker buy model, this is a 4-hour chart. These up close candles or these areas of old selling should become the areas of new buying. As we see here, we're going to have a new buying, new accumulation within here, new buying, new accumulation within here. But I want to notice that just throughout this model, what is held? Order blocks, down close candles. As you see, the sensitivity at all of these down close candles, these are kind of just stepping stones. As you see here, we have some manipulation lower, and then we come back and reprice to that. So this area right here, where the buying truly occurred here within this order block, is going to be sensitive here. Then we have another manipulation move lower, come back, and then we reverse that. So this area, when we come back to it, is going to be very sensitive. Boom, because that's where smart money truly bought. They manipulated price lower, and then we reprice it higher to where the buying really occurred. Boom, we come back there. same thing. Manipulation lower, come back down to that area, that order block. Nice, beefy down close candle. Boom, gets respected here. And as we see, the same thing occurs here. We have a nice mitigation block. Say you're offside here. Large funds and institutions that are offside within this move get a chance to mitigate that loss here. Say they were selling here, and they thought that this was going to be an order block, or they have to because they have to hedge because they have large positions. They're going to buy here, and boom, they're given a chance to mitigate that. And look at that order block that gets held up nicely. And all of this just works together. All of this just blends together into a nice market maker buy model. And here is these are reclaimed order blocks. And I just want to throw this in here just because I've been kind of studying this. And as we see here, look at these reclaimed order blocks on the left side of the curve. This is why it's a market maker buy model, because it's highlighting the areas on the left side of the curve can be used on the right side of the curve. And here we have a reclaimed order block, which is an area in which price got pushed lower, to which we push price lower here. And then now once we hold above that, this is now going to be reclaimed as an order block. And look at the sensitivity right there. Look at the sensitivity right there. So these are just areas of mitigation in a sense. So it's the low of the mitigation block right there. Boom. 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 Yeah, look at that. Look at that sensitivity. And here is that standard deviation I want to map out. Here's going to be some standard deviations. So I'm going to project. Here we have the 4-hour wick. The wick shows manipulation, so I'm able to map out that wick. Here we have -5, pretty much at the buy side. And look at, you can have standard deviation projections here. You have a area of silver bullet accumulation right here. Boom, that could be nice. A little market maker model from here to here. And notice how we have a market maker model from here to here, market maker model from here to here, and a market maker model from here to here. Here is that first retracement leg that I used nice. And look at the sensitivity to these levels. -1.5 hit perfectly. Then we reaccumulate right there. -2, 2.5, possible area of reversal or short-term retracement. We end up having short-term retracement there. And look at -3. Very nice standard deviation projections from this first retracement. Here is another standard deviation you could have used. This fulcrum point right here, -1 lines up nicely. -0.5, sort of reaction right there. That could be your low-hanging fruit objective. And then here is another standard deviation projection, -4 lined up nicely. This is here, reaccumulation zone gets held up nicely there. And then lastly, here's that last form of manipulation. And as you see here, all these concepts kind of come together. Old areas of selling, old areas of selling will become new areas of buying. And that's exactly what will end up happening here on this market maker buy model. So we can use these areas on the left side of the curve where smart money previously bought. We can use those new areas. If we are in a market maker buy model, they should be looking to come to their they should be looking to add into their positions because they have to hedge within the market. Here we have smart money reversal, accumulation up to that terminus, and it'd be a very nice market maker buy model. Notice how I said that we will come back to this chart. The reason why I want to point this out is because I think that this is happening right within the markets as we currently speak. As the time of recording this, it's Sunday, June 23rd. It's Sunday, June 23rd as I'm recording this. And as we can see on ES right now, we might have an area of a market maker buy model. Here we have a daily imbalance. And it kind of is the same fractal on price. That 4-hour chart that we have currently. This could be area of smart money reversal, distribution, and then possibly another area of distribution. Here to this terminus point right here, this 4-hour order block. And then I think we could have a smart money reversal here, and then map out pretty much the same market maker buy model. Yeah, if we look at this chart, same thing, same principle. We have an order block that had the smart money reversal, and that's within a daily fair value gap, and that could frame a market maker buy model. So I'm just gonna see what happens, but this would be pretty nice if this actually pans out. So we'll see, and I guess we could come back to this and some market reviews or some case studies, and we can say, hey, what panned out, what didn't. Was it an actual market maker model, or what actually happened? And I guess I'm not gonna say, oh yeah, we're gonna have this market maker model before it actually happens, but I'm just pointing this out that this could be an area of market maker model comparative to this study that we just had. Anyways, I appreciate you guys, and I will see you guys in the next one.